Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday the 20th of May 2021 and we're publishing the 18th episode in our Bitcoin versus Gold and Silver series. In today's episode we look at $28,000 Bitcoin, especially when previously we were potentially looking at $130,000 plus Bitcoin. So what has changed? Let's take a look and find out. Now, before we look at $28,000 Bitcoin and the reasons for its fall, just a quick summary of our previous 17 episodes. In episodes 1 to 5, we explained why we launched this series and why people found Bitcoin attractive. We confirmed the size of the equity and gold and silver markets and compared them with Bitcoin's capitalization value. We highlighted a non-exhaustive list of the disadvantages of Bitcoin, which are similar to other cryptocurrencies, and that Anthony Scaramucci's Skybridge Capital had launched a brand new Bitcoin fund and the reason for doing so. We also looked at the intrinsic value of gold and silver compared with the intrinsic value of Bitcoin. The reason we're splitting these up into different episodes is that if you haven't heard some of these, we do have a playlist here on YouTube that can be accessed directly. In episodes 6 to 10, we looked at a number of YouTube and Google influencers and why Bitcoin's prices fluctuated so much. We analysed the effect of how the shortage of microchips affected the ability to mine more Bitcoin. And we also covered the Reddit Robinhood short squeeze on Bitcoin and how some of the serious fund managers and hedge funds were predicting $85,000 Bitcoin into the not too distant future. In episodes 11 to 16, we talked about the potential future direction for Bitcoin, gold and silver, and compared what was then gold and silver's weakness with Bitcoin's robustness, and concluded that Bitcoin may still have a little further to rise, while gold and silver then were likely to consolidate, which is what happened at the time, but it has all changed since. And in episode 17, we asked, when Bitcoin stood at $60,000, would the bubble burst? Especially considering the backdrop of the likes of JP Morgan then talking about the potential for $130,000 Bitcoin. We also explored the possibility of Ethereum and pondered whether that would be perhaps a more beneficial alternative investment, bearing in mind its relatively low price and of course its potential, because unlike Bitcoin, it has additional features attached. Well, the landscape has changed quite considerably since that last video. Most cryptocurrencies are down, and especially Bitcoin, and even Ethereum has taken a hit. In episode 17, Ethereum stood at $4,162 and Bitcoin at $58,303. At the time of producing this video, Ethereum stands at $2,741, so a fall of 34%, and Bitcoin at $27,907, so just below $28,000, a fall of 52%. That, to speculators, might appear attractive or may actually cause a further degree of panic. Now, much of this decline started towards the end of last week when Elon Musk's Tesla's boss commented that Tesla would no longer accept Bitcoin, in spite of investing $1.5 billion in the coin a couple of months ago, primarily refusing to accept it now based on environmental grounds. The energy exerted in actually mining the coin does not match with his environmentally friendly company. He also appeared on Saturday Night Live and produced other tweets over the weekend which seemed to knock the cryptocurrency industry for six, even though he tried to walk back some of the comments. And we covered some of this in our video entitled Bitcoin and Cryptos Crash Thanks to Elon Musk, What is Going On?, which was published on the 17th of May. And we've placed a link to this video in the description box below. But in addition to Elon Musk's antics, the Chinese government also expressed concerns about accepting cryptocurrencies and backed this up by prohibiting Chinese financial institutions from carrying out business using cryptocurrencies. Of course, these pullbacks and fears have investors worried, with rumours that cryptos could now be going to zero, as other countries may follow suit. However, Palash Ghosh of Forbes magazine has a potentially, I say potentially, differing opinion, or a wider opinion. In an article published earlier today by Forbes, this is what he stated, quote, "Cryptocurrencies, including Bitcoin and Ethereum, have racked up huge losses this week, yet some crypto experts say such volatility is normal and to be expected from such a speculative asset class that has already enjoyed immense price appreciation in such a short time. The recent declines in Bitcoin and other digital currencies worsened after the Chinese government's recent decision to prohibit financial institutions from carrying out businesses using cryptocurrencies, and Tesla chief Elon Musk's announcement last week his company would no longer accept payments in Bitcoin due to climate impact concerns relating to their mining. Moreover, analysts at JP Morgan said in a report on Tuesday that based on future contracts, large institutional investors are most likely unloading Bitcoin in favor of safe haven asset gold. Let me stop there a second. Over the past 3 days, we've produced 3 videos. Gold and silver price optimism at last. Gold and silver begin to surge, will it continue? And 7 reasons why gold prices could surge and soon. And we've placed links to these in the description box below. Please, please, if you haven't listened to them, do so. This is a most exciting time potentially for gold. Not necessarily going to happen. We're going to see a boom this week. But the setting is being put into place for a rise in gold. And this is now even further backed up with what institutional investors are actually doing. We have long since stated, regardless of what other commentators have said, and it's quite annoying when people throw this back at us and say you're wrong, we have long since stated that Bitcoin and cryptocurrencies have taken a moderate, if not quite reasonable percentage of investment away from gold and silver. And now this is slowly starting to be revealed by people, institutional investors coming out of Bitcoin and putting those funds back into safe haven asset, especially gold. Let's carry on with the article. Despite the recent drops year to date, the value of Bitcoin has more than quadrupled in value since hovering around $10,000 last September, buoyed by banks such as Goldman Sachs, National Bank of Canada, hedge funds and other companies such as PayPal and Xbox adopting cryptocurrencies. Elon Musk is the best salesman in the world with a cult-like following. Whatever Musk says is like divine words for a lot of people, but it's not just about Musk. It's what is perceived will happen when people like Musk get involved and either take a bullish or bearish stance towards cryptos. Once Musk added Bitcoin to the balance sheet of Tesla, many investors thought many other companies would follow. It was that perception, instead of Musk buying Bitcoin, that drove Bitcoin higher. Crypto, though, is also coming under regulatory pressures. While China has banned financial and payment institutions from providing services related to crypto transactions, Gary Gensler, chairman of the Securities and Exchange Commission, recently said the US lacks a regulatory framework for crypto exchanges, which also lack protection against fraud or manipulation. We quoted this ourselves a little while ago. On Wednesday, Senate Banking Chair Sherrod Brown urged the Biden administration to crack down on cryptocurrency companies, characterizing digital assets as risky and unproven. On Tuesday, Bernstein analyst Harshita Rawat said in a note that government crackdown on cryptocurrencies could potentially trigger another crypto winter and reduce trading activity. However, Luke Lloyd, investment strategist at Strategic Wealth Partners, thinks government regulations may hurt smaller cryptos that no one ever heard of, but he points out that major digital assets like Bitcoin or Ethereum will not be greatly impacted in the long term from regulation, because Bitcoin can't really be regulated unless the online exchanges are completely banned and made illegal to transact. In addition, ironically, a little bit of regulation and government oversight may actually be bullish for Bitcoin because it bestows legitimacy upon it. Unquote. Interesting comments. Two sides. One, it could be going to zero as regulators really impact. Or two, perhaps the smaller cryptos will be affected, but Bitcoin and Ethereum over the medium to long term could hugely benefit from some slight government oversight. Meanwhile, gold and silver have benefited since episode 17, whereas gold stood at $1,840, it now stands at $1,880, and where silver stood at $2,770, it's now $2,795, though both have been higher than these figures these past 7 days. So what do you think is going to happen? Are we going to see cryptos go to zero? Are we going to see the smaller ones suffer and the larger ones benefit? Do share your thoughts. Meanwhile, thank you so much for listening. Do look at the videos we've placed in the links below if you haven't had an opportunity to view them. We noticed the viewing is down. We were offline really for 3 weeks, producing only 1 or 2 videos a week, which we know affects viewership. But we would ask that perhaps if you can, you at least press the bell sign so you're notified of our videos as and when they are published. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.